And welcome to the MEM Edge Show. This is Mary Ellen McGonagle, where each Friday we bring to you where the action is in the broader markets. What I'm going to do today, of course, is share with you a very thorough review of this week's activity, and all with an eye toward helping you set up a game plan for next week and going forward. So let's go ahead and get started with our agenda today. First thing, of course, as mentioned, we'll go ahead and take a look at the markets and drill down beyond that, get a feel for where the money flows may have been. It was a rather lackluster week overall, but there were pockets of strength that we certainly want to be aware of. And consumer sentiment numbers, they came out strong today. So what I thought I'd do is share with you some of these consumer related stocks. It really is a rather fractured market with the haves and the have-nots, but there are some areas that are bound and poised to continue to outperform. So we'll look at that. Also, stocks were not out of earnings season quite yet, and we do have a number of bellwether or certainly well-known names that are due to report that could easily impact the markets, and also names that you'll want to be aware of that are going to be reporting their Q3 numbers. And also, I'm going to share with you an easy way that you can use ETF. Those are exchange traded funds that are comprised of baskets of security that are designed to mimic either an index or a part of the economy, an industry, and so on. And there is a way that you can use these ETFs to uncover where the strength is in the markets, but also uncover stocks. Why are these ETFs outperforming? So we are going to take a look at that as well. So let's go ahead and get started. What I'd like to do is share with you initially taking a look at the S&P 500. This is a daily price chart. So each of these bars is 1 day of trading activity. And while the broader markets pulled back ever so slightly this week, I think we were down about 1/3% at the close for the entire week. Take a look. The index found support at this upward trending 10-day simple moving average. And this is, from my work, is the line certainly for the near term uptrend. And it does tell us that the near term uptrend is still firmly in place. Let's put that together with some of the other indicators I have here, the RSI. And of course, we did have that turn positive back here in the beginning of October. And we did reach a little bit of an overbought period, and that was last week. And there was concern. It's not very often that the S&P 500 RSI gets overbought, but this week's little pullback pulled that RSI down into that positive territory, and that is a relative strength indicator. For those of you not familiar, it is a momentum indicator. And down below, I have what's called the MACD moving average convergence divergence, another momentum indicator. For this indicator, two components. You want to pay attention to the black line as it behaves around the red line. So the black line up through the red, and then also heading up above that net neutral zero. That's again occurred in the beginning of October, which brought the uptrend, confirmed a near-term uptrend. So more recently, we are up here above that zero in positive territory. We got a little bit of a black line down through the red, but not concerning enough. It is not as certainly visible as other periods and other areas where you can go back to this May, and there's a very clear separation and declining that is occurring. So that's the broader markets. Now we can go ahead and take a look at the 11 different sectors that the S&P 500 is comprised of. And so by looking at these sectors, it's really going to help you uncover where the money flows are going to, which areas of the market are being held up, which are going under distribution and are deteriorating, again, all with an eye so that you can know where to focus your energies and your research. So I've gone ahead and put in these 11 sectors as well as the S&P 500, added an RSI, that relative strength momentum indicator. And then each of these charts is a daily 2-month snapshot. And I've gone ahead and sorted it in descending order because I would like to see where the strength is, which is up over here, relative to the weakness down in this lower right quartile. So let's take a look. Healthcare up here in the forefront. Now, for those of you that watch my show regularly, and I would urge you to do so, we covered healthcare quite a bit last week. We were recognizing the strength going into that sector, primarily into biotechs and other areas. Good to see that we are seeing a continuation of that move into healthcare. Financials a little bit flat for the week, but still holding up here, again, up here in the forefront. We have the S&P 500. Technology stocks, they did pull back just a bit this week. And as we review and drill down into some of these into some of these industry group ETFs, I'll be able to share with you where we saw just a little bit of weakness in technology, still holding up well. Industrials bounced around, mostly flat for the week, but still up here in the forefront. So what we can see is these cyclical areas, industrials, financials, and some of the techs are very cyclical. They're still remaining up here in the forefront as we go into the end of the year. And this is actually a very common phenomenon for the end of the year. These areas and groups do come to the forefront. From technology, we can see that XLC, which is the media communications area up here in the forefront. And also, as we drill down further, we can see that some of these defensive areas are drifting a little bit back to the lower quartile in performance-wise. And certainly real estate stocks did get hit this week, and they are certainly the worst performers. These high yielding real estate stocks potentially not in such heavy favor as they were in the first half, or certainly the first 3 quarters of this year. So that is a quick snapshot view. I did want to point out to you that consumer discretionary, I talked to you about it being a kind of fractured area because there are clear-cut areas of outperformance, but you are seeing some seeming deterioration in the group chart, and XLY is the ticker symbol for this sector. A lot of times it can be helpful to go in and see what are the heavy weight components of any given sector. And for XLY, Amazon is a big one. Home Depot, which fell apart this week, is another big holding. But I will tell you, there are pockets of strength that is in this sector that we can go ahead and take a look at. So that's your sector view. From here, what I would love to do is now share with you the industry grouping beyond the broader sector look. So let me see if I can get us there. And that is the sector. So here we are. And what I've done is populated this candle glance view with not only the broader market indices, also some of these, to me, more relevant industry groupings. For instance, the yield on the 10-year treasury. We have biotechs. And also I want to see how gold is doing, transports, and so forth. This will make sense as we move forward because, again, populating it with that RSI, and you can certainly have the indicator of your choice, but using the RSI and then sorting it descending, I'm going to go ahead and update this. Again, strength to weakness, and take a look. Biotechs are, again, for that second week up here in the forefront as an outperformer. And this is really quite constructive. There are a number of dynamics that are driving biotech shares as far as approval rates, approval time being reduced, red tape being reduced. So a number of these biotech firms are now able to get their potential products to the market faster through their clinical phases. And then some of the bigger biotech names that actually have earnings are faring well. Biogen comes to mind. But more importantly is when we see money flows into biotech stocks, because an absolute majority of these companies do not yet have earnings, they're still in that discovery phase. That implies and points to a real confidence by investors in this market. Investors have confidence that the uptrend is in place and going to continue. And so good to see biotechs up here in the forefront. This next IGV you may not be familiar with, but it is a broad-based software. So it's technology software ETF, IGV. So what I wanted to point out to you here is a nice uptick. Certainly in the beginning of the week, the last 2 days, it traded a bit sideways. And this is an area, let's go ahead and blow this up very quickly so I can share with you. Big winner in the first half of the year going into the end of July, fell out of favor, but more recently is coming back into play. So that is really important because a lot of these software stocks are high growers and you want to see these high growth stocks performing well. Of course, we have the S&P and the Dow Industrials, followed by the NASDAQ. But moving on, oil had a big spike in price this week. Now, while that may be interesting to some, I would argue, let's just take a big view here, that this certainly oil and a lot of energy stocks trade in tandem with the price of oil. Not yet ready for prime time. We're just now breaking up above here, but we just have a lot of messiness that needs to be overcome and a real true uptrend in place before I would get back into energy shares. Russell 2000 faltered a bit. It was about down almost about 1% this week. But take a look here. This is the SOXX. That is the semiconductor index. And the reason I'm pointing that out to you is because I mentioned to you that technology sector pulled back a bit, and it has a lot to do with the semiconductor. It dropped about 3% for the week. So just keeping an eye on that, because a 3% drop, given the 12% improvement this group has seen over the last month or so, is not yet concerning, but of note. And then transports, they have been waffling a bit here depending on their earnings reports. So that is your closer view to the markets and certainly where the strength is, so that you can then focus in on those areas for your stocks. Let's take a minute here. We're going to have a brief break. When we get back, I'm going to share with you that ETF trick, if you will. It's something that does not take a lot of time, but it is very, very telling. So we'll be right back after this. And welcome back. We are looking here at the that first page from StockCharts.com, and I talked to you about those ETFs. One way that you can get in front of not only the top performers, I'm going to share with you the top movers this week. That's another way. And from my work, I like to keep an eye on that. It's another way to confirm where the strength is in the market. So where I'm going to take you now is under the member tools, SCTR reports, and that is the StockCharts technical rating reports. So let's go ahead in and take a look, because the initial review is large cap stocks. So what you are looking at here quite simply are the top StockCharts technically rated companies listed, strength to weakness, target, and so on down the line. The SCTR rating is listed over here. Now, a lot of times when it gets up to 99, a lot of the move has occurred, but it's still definitely worth noting. You will see themes. What I'm going to do from here is go ahead and sneak over to US ETFs. And you can see you can do this for small, mid, and foreign stocks as well. But taking a look over here at the US ETFs. So there are 100 listed, again, ranked by what I call strength, because it is using that technical rating. So quite simply, we can see a couple of themes here as we move down. And so when I see ETFs, for instance, the Indian rupee, silver, semiconductors, palladium, that's not going to be as interesting to my work. From my work, already know that there is a move into semiconductors, but let's take a look at, for instance, SNSR, Global X Internet of Things. So what we can do is hover over that, and you can see just how strong, actually it'll just take a moment to look at the chart, and you can see really how strong this particular ETF has been. So what I've done, and again, something you can do quite easily, is go ahead and Google what are the top holdings of SNSR ETF. Boom, it'll immediately reveal that to you, this Internet of Things. And what I can do is share with you on a different screen, because we're going to want to go back to this scooter rating with the ETFs, but I will share with you some of the actually the biggest holding is DXCM. And interestingly, this stock is Dexcom. And I'll blow this up just a bit. This stock works, has insulin related products, insulin pumps, but they are actually very highly evolved, and they are devices that can be accessed remotely. They've come really quite far. Take a look at this gap up. This is on very strong earnings. And just even to use this as a lesson for the gap up concept, because we've seen a lot of stocks gapping up on earnings this year, or this third quarter. And we can see this gap up. Now, when you see this type of volume, take a look at that volume relative to historical precedent. It is really parabolic, and it does imply further upside. As analysts dig their sleeves up and look behind the numbers, the outlook is super promising. It's calling for triple-digit growth for Dexcom. So even though we are in a bit of an overbought position, your RSI up there above 70, the stock really is supercharged, and we could even see more upside. Another SNSR, that ETF top holding, DXCM was the top one. This stock, SWKS, was number 2 as the percent holding in that ETF. This is Skyworks, and it is a semiconductor stock. And this is another one that had a gap up following earnings. And it's really kind of back and fill. It looks to be forming more of a flat base here, and it very well could come out of here, because your RSI and your MACD are both positive. So 2 stocks to put on your radar from that. Let's go back to this scooter summary, and I'll point out another one that caught my eye, because a lot of these are going to say biotech, semiconductors, healthcare. We know healthcare is strong. We know semis are. But what about the obesity ETF, SLIM? Now, that's an interesting name. Again, Google SLIM, top holdings, and I will share with you. This is an ETF that is designed to help combat obesity. So not surprisingly, one of their first holdings was DXCM. And I did notice DXCM in the top of a lot of other strong ETFs. So I'll share a couple more with you as well. But let's take a look at some of the other names in SLIM ETF. And looking again at that top holdings list, this is PODD, Insulet Corp. This is another diabetic product manufacturer. And we can see that the stock, going back to here, this was a gap up on earnings. And we did get very big volume. The stock has continued an uptrend, also broke out of this base. This is a nice 2-month base that the stock broke out of. Now, certainly it is due a pause. The stock is overbought. We could very well see it waffle, mark time here for a while before continuing an advance. But PODD would be certainly worth paying attention to. Another name from that SLIM ETF, RMD, was another top holding. And this is another one that had this big gap up on earnings. Volume not as parabolic, so we can see that the stock since then has faded a bit. But when you see a stock breaking out on that gap up, that is quite constructive, especially if the stock's price can, for the most part, stay above this breakout level. And we have been able to do that. So that's very bullish, very constructive. So that is SLIM. I went ahead outside of Scooter. I wanted to see, because this SCTR view is telling you those that are super strong. I ran a screen outside of this that you can do on StockCharts.com very easily on ETFs. And I wanted to see which ETFs were the best performers for the week. These are ETFs that were up at least 3%. A lot of them were the triple and double ETFs, and that's not an area that interests me. The first one that was not of that nature and was an ETF is BFIT. I'll tell you, it's not an ETF I would purchase because you can see the volume characteristics are nominal, and that would make the ETF rather difficult to exit and even enter. You're going to get spreads that are not very desirable, but rather very quick check. What are the top holdings? No surprise, DXCM was the top holding for this one, but let's drill down and look at some of the other top holdings in this BFIT ETF. Lululemon, nice. This is a big winning stock, a name that I've had on my MEM investment research MEM Edge report. We got investors in back here, and they've been able to take advantage of this very nice uptrend. Nike is another one that was on our suggested holdings list prior to this fallout. Nice uptrend here, and the stock does appear to be reversing this downturn trend. So that's very, very encouraging. So I can just share, I'll do it very quickly, one last one. CLOU, this is another ETF, cloud computing. We can see this nice uptrend here, and I'll share with you just two of the top holdings to give you another flavor. This is Paycom, big gap up here, breaking out of this long-term base. RSI, MACD are positive, so quite encouraging. And then PLAN was their second biggest holding, another one that gapped up on earnings. Take a look at this continued volume, very bullish. Stock broke back above these simple moving averages. So hopefully that was helpful as a way to use ETFs, not only to pinpoint where the strength is. Again, I like to see on a weekly basis where the money flows are going, but really quickly you can see what the top holdings are that are driving that up, those money flows, and driving the ETFs higher. So what I'm going to do now is share with you some of the companies that are due to report earnings next week. And we are filtering, certainly over 95% of the S&P 500 has reported, but we do still have some bellwether names that are coming up as the Q3 earnings season kind of fades away here, but certainly worth noting. The first one is a software stock, and it's PANW. This is Palo Alto, and we can see the stock has been in a very significant, nice uptrend. It is in line or poised to break out of this very long 6-month base. That would be very constructive. Now, I'll tell you though, with these software stocks, let's take a look at one that reported today that was starting to look interesting. They came out with really good numbers. This is Intuit. They were just beginning to reverse their downtrend, but they did get walloped. They were able to find support at this 200-day. It might still be okay, but my bigger point here is if you are looking at stocks within software, you want to look at precedent. Are stocks that are coming in ahead of estimates being rewarded? PANW really has seemingly gotten a bit ahead of itself, so you have a sense that it would really have to report perfect numbers. But they're coming out on Monday. Another software stock due out on Tuesday, Viva, VEEV. This is another turnaround stock within software. Keep it on your radar, because if they were to report and then improve in price, that would be really constructive for a continuation of this move into software. Another name that is reporting this week is Baxter, and this is a big medical products stock. The reason I am pointing this one out, this had been a nice big winner for us at the MEM Edge report, but they fell out of bed here following their last release of earnings, and it had everything to do with the company's announcement of accounting mismanagement. So their numbers were not really correct. And actually, let me take a look. That was not on earnings. It was simply an announcement that they had been audited and their numbers were not being properly recorded. So they dropped. It'll be interesting to see how they, when they do come out and report their numbers, how they perform, because back here in July, this is when they reported last. So that's a big name that's due to report. And then one other name we can take a quick look at is Best Buy. And we know we are headed into the holiday season, and Best Buy, we can see, has been in an uptrend. Analysts, for the most part, have been fairly bullish on this stock, but we can see that it's fallen a bit out of bed here more recently, which really you don't mind seeing going into earnings. You'd rather have that than a perfectly priced stock, but I think Best Buy is going to set the tone for a lot of the other retailers that are due to report coming up here. Now, speaking of retailers, I did mention to you in the beginning of the show that the consumer sentiment index was announced today, and it climbed up to a level of 96.8. This signals quite a bit in the way of optimism. In fact, we have not seen this type of optimism. You'd have to go back to the period between 98 and 2000 when the index was up in these levels. Pardon me. So that is bullish. With that in mind, I did want to take a look at some retailers, some consumer names that are holding up well. The first name we're going to take a look at, I'm not sure if many of you follow this, but the ticker symbol is RACE. This is Ferrari, is the ticker symbol, and it kind of addresses what I talked about, that there's a fractured market because Ferrari is doing well, Louis Vuitton, some of these really high-end stocks and companies. Ferrari came out, this gap up here, they announced the introduction of yet another new model of their car, and the pricing on it is 200,000 euros. I will say my neighbor just bought a Ferrari and my eyes are falling out of my head, but we can see what the stock did in response. It gapped up. Take a look at this volume, and we can see that it pulled it back rather nicely to this 10-day simple moving average, really marking time. Again, you had this breakout here on this gap up, which was good news. Once the stock is able to get back up above that 170, we could see another advance in RACE, similar to this uptrending period earlier in the year. Let's take a look at another retailer that is actually holding in well and looking interesting. It reported this week. This is Target, TGT, and this is another stock from the MEM investment research from our report. We've been in this for a while, and the stock gapped up. Now, one of the things that attracted me to Target is the fact that historically, going back over the last several quarters, the stock has really come in above estimates, pleased investors, gapped up, and then gone higher. We saw it back here for Q2 earnings, gaps up, trades mostly higher, gaps up. The company really is doing a lot of things right as far as their digital sales. They've gone in and refurbished stores. They now will have mini Disney stores in there. So management is getting it right, and Wall Street likes it. So the stock is very much seemingly in a near-term uptrend. I'm going to leave it at that. For those of you trading next week, happy trading and happy Thanksgiving as well. Take care.